Welcome to the Service to Syndication podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, capital raisers in the world who have worn the uniform of this great country, those who provide services to our men and women in uniform, and other service-oriented professionals to provide you with the tool sets, the mindsets, and the skill sets to help you conquer your dreams and goals in real estate and to use this wealth creation vehicle so you can live a more successful, happy, and fulfilled life of generosity and prosperity. If what you desire is time, lifestyle, and financial freedom, you've come to the right place. We will bring to you the best real estate entrepreneurs who will give you the insights, the knowledge, experience, skills, so you can go out and crush it in whatever real estate asset class you desire. So grab a pencil and paper, sit back, and enjoy the ride on the Service to Syndication podcast. Hello, my servicemen and women and other service providers. Welcome to another episode of the Service to Syndication Real Estate Podcast. I am your host, Cedric Marlowe. I am a U.S. Navy vet. Here on the Service to Syndication Real Estate Podcast, we interview the most successful real estate entrepreneurs, investors, capital raisers in the world, where most have donned the uniforms of this great country. We aim to provide the tool sets, the mindset, skill sets for you to achieve your personal and business goals while using real estate as a wealth creation vehicle to help you live a more successful, happy, and fun-filled life. I am super excited today because I have Mr. Larry Lee, who is a top-notch real estate broker and VA specialist on board. But before I properly introduce our exciting guest to you, I just want to ask a favor of you. Please, if you get some value out of today's interview, if you get some type of insight, mindset shift, if you learn a new skill, new information, receive inspiration or motivation to go out and take some action to make some progress in your life, please share this episode with your friends. Send it to someone who you know who might be or could be interested in real estate. Share it on your social media, post it on your wall, or share it in your stories. Help us spread our message while you help others. And for all of you who shared this episode, I want to say thank you. And again, everybody, like I said, we have today Mr. Larry Lee. And Larry loves the mortgage business, but was fed up with the lack of education and information clients were provided during the application process. So he created a first-time home buyer coaching class for mortgage clients that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify. Larry also provides one-on-one coaching for those who want it. Unlike other loan officers, he made it his passion to coach first-time home buyers on the mortgage process that makes all the difference of how he has helped hundreds of people get on the right path to home ownership, with many of them becoming homeowners. The home buying process is very confusing to most people, but that is why Larry is here to provide this process and make sure you are 100% prepared in the home buying process and to become ahead of the competition. And the reason why Larry focuses on veterans is to this. His father was living in Da Nang, Vietnam during the fall of Saigon. His mother lived in Saigon. Larry's father left by helicopter, his mother by boat. It was U.S. soldiers who helped them get in the helicopter and on the boat. They met in Hong Kong, China. If it wasn't for the U.S. soldiers, his parents may not have survived, met, and had him. And he wouldn't have had uh, the opportunity today that he has. Um, and he may not exist. The U.S. soldiers are veterans now. They are vets, and he owe his life to them. Thank you, Larry, for being our guest today. So, listen, I read a lot. I want you to fill in the gaps a little bit in
Yes.
75 seconds or less. What led you on the path of becoming a mortgage broker?
So I've always been an entrepreneur and ran businesses and such. And I guess sales kind of became a part of the skill sets that I developed. So I've sold many different things. I did door-to-door sales where I sold artwork from the back of my car, and I sold cars. And I just felt like there was more to my skill set and what I can serve the community with. Nothing wrong with car sales or selling artwork, but I really don't help them change their lives as much as I want to, right? And plus, a lot of these sales uh, positions I was a part of, they weren't very well regulated. They weren't. It felt almost kind of salesy, kind of slimy to be part of. I think the mortgage industry is a little bit more regulated and has a lot more anti-discrimination laws and such. So I felt it was a better industry for me to be in to utilize my skill set. Now, the reason why I focus on being a veteran mortgage advisor is because like you read my story. I owe everything to the U.S. military and veterans. I wouldn't exist. I would have kids. I wouldn't have a wife if it wasn't for that particular part of our community, right? And because of that, I focus on helping veterans, but I really didn't want to. Uh, I wanted to give them the best quality service possible. And I know that the VA loan is very mishandled, is very misunderstood. A lot of loan officers and real estate agents are kind of afraid to be involved with veterans and helping with the VA loan. Whereas I want to do the opposite. I want to be head first, dive in and learn as much as I can. That way I can be confident and be an advocate. So I'm not a veteran, but I am definitely a patriot.
Yeah, yeah. And this is is definitely great appreciated, and I can tell just by how you come across that you're very appreciative for what those soldiers did, and this is your way of paying it back or paying it forward, if you will, to
Yes.
help out other veterans and understand the loan process, and that's greatly appreciated. So Larry, what are some of the eligibility requirements for a VA loan?
So, the VA eligibility, it's really a lot of people get it confused, right? Or they don't know the details. So, we try to, as vendor mortgage advisors, we try to simplify it, right? So, the first thing that, of course, makes a difference is if you served, right, one way or another, right? Whether you served, overseas or part of the National Guard, depend, and of course, which branch that you served. So, as long as you served, then you've kind of passed that first barrier, right? So, a lot of people say, well, I was, my father was a veteran, or my son's a veteran, or my son's serving. You have to be in service, right? So, I've had people say, well, because I asked them, are you a veteran? It's like, well, my dad was a veteran. It's like, well, sorry, you don't qualify because you have to be the one in service. Or if you're married to someone who served, then you possibly can qualify, right? And there's little nuances to explain that. Okay, but I actually have a chart that I send to people if they're questioning it. But again, if you serve, then that's when we dive a little bit deeper and ask you a few questions. So there's a few requirements, but service is one of them. And another requirement is how long have you served or what did you serve, right? So, for example, if you served during World War II, 90 days of continuous service. If you served maybe Korean, 90 days, of course. If it's post-Korean, right? So basically, it wasn't during the Korean War; it was post-Korean War. There's 181 days. So it's like 90 days during wartime. If it's post-wartime, then it's about 181 days. Okay. So like the Persian Gulf is a good example as well. 2 years or active duty, as long as it's not less than 90 days. But if it's active duty, then of course that's something we have to take a look at as well. But it really depends on the amount of service you provided, right?
Okay, okay. So let's say, okay, take for instance myself when I first joined the Navy, way back in the day. I my first enlistment was for 2 years. Okay. And of course it wasn't during no wartime at that particular time. If that was the only active duty time that I had served, let's say after my 2 years, I decided to get out and just be like, okay, I'm done with the military. would I have qualified?
Yes, 2 years, right? Or active duty, right? And active duty is either 90 days or 181 days. 90 days for wartime, 181 days for peacetime, right?
Okay.
So your 2 years would most likely qualify. Yes.
Okay. Okay. And so I think also what I heard you say um that you have like a worksheet or something that you would send someone to see if they're eligible and things like that, correct?
Yes. And
Okay.
I can send that to you. You can send it to your audience. Yes.
Okay. Great, great. Yeah, we'll definitely make sure we do that and then be able to put a link to it in the show notes. Definitely. Um so uh so let's talk because I currently have a VA mortgage. But let's talk down payments and closing costs. Is there a down payment required for a VA loan?
Actually, it depends on your eligibility, right? And that's a little bit more deeper lingo. But let's say you finish your service with the military, you're honorably discharged. More than likely, you have your full eligibility, meaning you haven't used it yet. So they give you, I mean, for lack of a better description, like a voucher or like a credit, right? That's reusable, by the way. So they give you a certain amount of eligibility, which in most cases it's going to be your full entitlement, which means you have all the credit that they're going to give you, which will serve as your down payment towards your purchase of your home. So the way you break it down is if you have, let's say, the full eligibility, then more than likely, depending on the loan limit, you're able to go with 0% down, 100%, meaning you don't have to put anything down. Now, the reason I bring up loan limits because it can make a difference, but in some lenders will actually have no limit, meaning like if you are buying for the first time,
Mhm.
you have full eligibility, you can buy a $2 million house and possibly put nothing down.
Oh, okay, okay. So, I'm assuming that it's more like a case by case basis, or a depending on where you go to get your mortgage, from that lender, whether they have these limits or not.
Some lenders will have it what they call an overlay, like a company created limitation where they might stop at 1 million,
Okay.
right? But VA, the answer to them on a, I guess what you call an overarching uh, guideline is there's no limit.
Okay. Okay. Gotcha. Gotcha. Um, so i- if there are no, what are typical closing costs associated with a VA loan?
Well, you have to look at it as all loans have closing costs, right? Whether you're going VA, conventional, FHA, or USDA, and of course other loan products as well. But they all have closing costs that are associated with buying a house. So uh, the way you kind of have to look at it is like you're combining certain fees with the certain loan product. The VA has zero down payment, but that's not really considered a closing cost. That's just how much you would bring to the table for closing, right? But there's going to be closing costs that are associated with all loan products, such as an appraisal, uh, you know, processing and underwriting, title work, also funds that you need to bring, which is not really considered a cost, but of course, when people are looking at their paperwork, they're looking at it as a cost. But you have to have prepaid insurance, prepaid taxes, escrow is what we call it, right?
Yeah. Yeah. Yeah.
That's not really a fee; it's something you have to put up front to prepay in order to get into the house, right? If you don't have that, they won't let you buy the house because certain things need to be paid. Period. So that's their way of guaranteeing it by making you pay up front, right? Um, so those costs are going to be across the board when it comes to all loan products. Now, something that's unique to the VA loan is the funding fee, right? The funding fee is something that the VA created in order to sort of finance the VA loan, right? Because when it comes to the down payment situation, they're not writing a check to the lender. What they're doing is they're vouching for the veteran. They're saying, if this veteran qualifies based on our guidelines, go ahead and lend the money to them to buy the house. If they were to default, we will cover the down payment that has been agreed upon when that happens. So they guarantee up to 25%, right? So let's say it's a $100,000 house. The VA is basically saying we will pay you, the lender, $25,000 if this veteran were to default, right? So it's not like they have a bank account where they're writing down payment checks. They're just saying, worst case scenario, we're making a bet on this veteran that they're not going to default. But if they do, we'll pay you the $25,000 that we say we would pay you because you gave them a VA loan. But again, the default rate for VA loans is a lot lower than all the other loans. So it's a really good bet. The veterans are just more responsible, I guess, so they make the bet knowing that they're probably going to win. Now, there are times where they have to pay out, right? Some veterans do default, life happens, right?
Mm-hmm.
So the VA funding fee is designed to sort of finance that.
Okay.
It's designed to sort of, everyone's kind of putting like a small deposit towards the big pot, just in case your fellow veteran does need help, right? So that's what the funding fee is for. And I'm explaining this to you guys so that you understand that the funding fee is actually a really good fee, because you're sort of you're sort of helping other veterans out get qualified, and for the most part, it's very small compared to like all the other fees that you're seeing these other borrowers are paying. So yeah, it's a VA funding fee. It's a certain amount when you first buy, and then it increases every reoccurring purchase. So your first purchase is going to be a lower percentage, and everything subsequently will be a little bit higher. Now there are exceptions where you might not pay it in case of maybe you are disabled, right? Your disability makes a difference. You can actually have your entire funding fee waived depending on your disability rating. So, but that's a little bit deeper information.
Okay. Great. Um, yeah, actually, that's the first time that I actually heard about the funding fee at all. So, again, I'm learning right along with everybody else who's listening to this. So, can these closing costs be rolled into the loan?
That's a great question, and it really depends. Okay, and the reason I'm saying this is because I've been in situations where I originated the loan
Hmm.
uh, to cover some of the closing costs, or there was a negotiation where the seller is going to be paying a certain amount, and there's actually a percentage limitation, right? So the easiest way to answer your question is yes, but to a point, right? And there's lots of other nuances which I still am still trying to learn, but there's nuances where uh, it's not paying closing costs, but it's like paying other stuff, which is really weird, right? Like a seller can pay off a debt for a veteran, oddly enough. So let's say, I don't know, let's say the veteran has, a four wheeler, right? Not a car, but a four wheeler, and there's like $2,000 left on the on their debt, right? And it's hurting their ability to qualify. Well, there's a possibility that the seller could just pay that off, and that's kind of part of like the concessions, right? But it gets really gnarly, and it would be a case by case basis to talk about that. But yes, there's instances where you can do that, and you can't do that with any other loan product. You can't do that with the FHA or USD or conventional.
Okay. Okay. Gotcha. Um, so is there a minimum credit score required for a VA loan?
So that's actually my favorite part of the VA loan. There's absolutely no credit
Oh,
minimum. Like there's no,
wow.
so, and the reason why, and I believe it's a great reason. Okay, uh, back when the VA decided to create the VA loan, uh, men and women were out, I don't know, historically maybe there weren't as many women, but there's definitely men. They're out there fighting wars, right? They're defending our country. They're protecting our allies, right? They didn't have time to work on their credit, right? They didn't have time to make money, right? So when they came back, and they came back in droves, the boomers, right? They came back in droves. They're like, these people need houses. but they have no money saved up, and their credit probably is non-existent,
Yeah.
right? So the VA is like, well, we gotta still put these people in houses, so let's go ahead and just not require a credit score, and we'll just make it zero down, right? So when people ask why are veterans getting zero down and why is there, they sort of needed it, right? And they kind of deserved, they earned it, right? Their down payment is their livelihood. Like they put their lives on the line for their country. That's their down payment, right?
Mm-hmm.
Their credit score, hello, they defended our country. They have more credit than we all have, right? So that's the reason why the VA decided no minimum credit score, no down payment, because of the fact that, and logistically that makes sense. Again, these men and women had no time. They were busy overseas, right?
Mm-hmm.
So yeah, there's no minimum credit requirement. Now, that being said, lenders still have their overlays. They have their requirements, right? They're like, okay, well, we still have to be able to make good risky decisions, right? So they have their minimum credit scores that they created, right? So when there's a minimum credit score in a VA loan, it's not created by the VA, it's created by the lender. Okay.
Okay.
Um, and for the most part, even I have a credit minimum requirement, but it's going to be 580 because it matches the FHA credit requirement, right? Because the FHA lowest minimum down credit score is 580. So they figure that a lot of lenders figure that's a good, dividing line, right? But some lenders, like ones that I worked with, where you can actually go down to 500 credit scores. I actually in my career, I've actually closed a veteran on a 503 credit score with zero down payment. So it's possible, right?
Okay.
But it's very, very difficult and very, very exceptional. Like that's not something that you should promote, right? That's not something that you should say, hey, you have a below 500 credit score, we can help you. No, more like there's a chance, but it's gonna take a lot of work. But I guess basically to answer your question, because I know why you're asking it, a lot of these clients, are your scores good enough? Well, it really depends. But if
Mm-hmm.
you have above 500, you have a chance,
Right.
right? With most, okay, with lenders in general, with most lenders, they're gonna look for 580.
Okay. All right.
Mhm.
So let's delve into that just a little bit deeper because this is something that I've recently learned. Um, so all of us, everyone here, if you're an adult over 18 or we'll say 21, definitely you should have some type of credit score. So we see, okay, I see my FICO score. I go and look, and my FICO score is whatever the number, let's say 700. However, mortgage companies uses they don't necessarily use that quote unquote FICO score that we all see as consumers. They use a different FICO score. Can you elaborate on that a little bit more?
I love that you asked this question because it's probably one of the most confusing parts about qualifying, right? And what I mean by that is through my experience, through all the people that I've helped when I have them apply and I look at the credit, that conversation is always the most confusing. That's like, wait a minute, why is you telling me my score is this? It happens all the time, right?
Mhm.
So the reason why there's a confusion is because let's let the bottom line is all about clout, right? Who has the most influence, right? Credit scores is a powerful determining factor of who you are as a consumer, right? And everyone's fighting to be the most recognized, most acknowledged, most used credit reporting system, right? So you have Vantage Score, you have FICO, then you have different uh, companies who provide it, like TransUnion, Equifax, right? They're all kind of fighting again for clout, for relevance, right? So, and purchases, they're all different. A purchase for a vehicle, a purchase for a home, a purchase for furniture, uh, any kind of finance that you might get for medical and care credit is, they all are going to use their own version or what they believe is the right standard or what's the most relevant to their purchase, right? Or what they're trying to sell, right? So the bottom line, and I should maybe reverse engineer this. We as lenders, we have a unified, agreed upon credit reporting system that Fannie and Freddie have decided to use, right? Specifically FICO 4, 5, and 2. Okay. So if you go to myfico.com, you can actually find all the different FICO scores, and it'll actually say used for mortgages, FICO 4, 5, and 2. And it'll actually say used for mortgages, right? And it's gonna be it's gonna be one section of like 20. Okay. So only we as lenders see this, right? So not to make anyone feel bad, but you as a consumer, you will never have access to this. Okay, this is a lender reporting system that we have access to, right? Now, of course, if you have a friend with a loan officer, you might be able to ask them to pull your credit and they can give it to you, but you yourself cannot pull this credit score. Only we can do this, okay? So that's why, number one, that's going to be different from everything else you see. Because what you're looking at is you're going to look at consumer reports, reports that you paid for, reports that you're getting from someone else who is not sending it to the lender, right? You're getting from someone else who is using their system, and not to say that their system is not right, it's just not what we lenders use, if that makes any sense, right? Now, if you say which one's the right one, well, I'm going to say mine's the right one because obviously that's the one we use to qualify you, right? We're not going to use your scores. We have to use our scores because that's what Fannie and Freddie requires us to use. So again, we as lenders, we have our own system that we are required to use. And again, if it comes to right or wrong, mine's right, yours wrong, because that's the one I have to use, right? But I'm not saying it's better or worse. That's not what I'm saying, okay? I'm saying that's just what we have to use, right? So if you, as the consumer applying for a mortgage, can understand that what we see is going to be something you cannot see, you cannot create yourself, then you'll understand everything that you're looking at is not the correct or not the one that you should depend on, right? And actually, I do a whole class on this, right?
Okay.
And there's a report, I forgot who created the CFPB, Consumer Financial Protection Bureau. They're like the governing body that regulates mortgages and other financial institutions. They're like the IRS for financing, right? They actually have a report they put out, and one of the lines says, consumers should not depend on credit reports that they bought themselves as a determining factor, right? Because there's no way to determine if it's going to be accurate or not. There's no way, because it's not going to be the same, if that makes any sense. Like you even if you're window shopping, you have to be an employee to see the back. You see what I'm saying? You could be window shopping, you can go into the side of the store, you can look at it, you can try the shoes on, but the shoes in the back are the ones that I know, right? That are available, right? You don't have access to that, period. Okay. So only person who's buying a house that might know the scores is going to be a lender. So if I put my own credit scores, I would know. You see what I'm saying? But I think that's actually kind of illegal or unethical. You're not supposed to do that, right? If you're going to apply for a mortgage, you can't do your own mortgage. Someone else has to be doing it for you, right? But that's the only time I think a home buyer can really see their true credit scores, right? Now, that being said, there are resources out there that you can apply for or you can pay for that can give you pretty accurate scores, right? I think it's like myfreecreditreport.com. You actually do that one time a year, and they give you pretty accurate scores that you might see that reflects similar to what the lenders would see. Okay, so if you're looking for the best intel possible that you as a consumer can get, then I suggest looking for that. And again, I wrote a whole class about it. I can send you the link later on. So my free credit report might be the wrong one, but it is endorsed by the government. Okay.
Got it.
So that's the one thing that I would suggest. And then of course, myfico.com is pretty good as well, because of obviously we're using FICO scores, but I think the one that most people recommend because it's free is going to be myfreecreditreport.com. I think that's the URL. I did like TikToks on it, YouTube on it. I just don't remember offhand.
Okay.
But to answer your question, and I know it's a long answer, but to kind of sum it up, your information is incorrect because you're not getting the lender credit pool that I'm getting. So try not to be upset if it's not the number you want to see. Now, sometimes it's better, right? They'll tell me, oh, my credit card tells me I'm a 600 and I pull it as a 680. And they're like, wow, that's awesome. And I'm like, yeah, aren't you glad that we're using the real scores and not the credit, the scores that you saw, right? So it does happen once in a while. And I mean, it's always it's always an awkward conversation for the lender if the borrower says, "Oh, I have a 680 credit score, da da da. My bank told me this and whatever," and you pull the credit is lower. It's always so. Not to say that we can't handle that conversation, but it'd be a lot better if consumers understood that, right? And that's one of the reasons why I made the video. One of the reasons I made, because I'm trying to educate and set expectations with everyone. I want to go viral because I want everyone to know, hey, Larry the mortgage guy said that my credit score that I see are not what I'm going to get whenever I have my credit pull. That would make for a better conversation and set expectations, and make it easier for people to be prepared to buy.
Yeah, I totally get it. Like I said, I know this firsthand. That was the reason I asked the question. I'm jumping up and down on the table, kicking and screaming. I'm like, look, this is my credit score. Look at it. It's my freaking credit score. And they're like, yeah, but that's not the one we use. Which honestly, I think that, and I know like car companies, all that, they use different credit scores as well. Which and I think it's quite misleading for us consumers because we see a credit score. We like, okay, that's our credit score. I can go apply for whatever I want to because I have this number. But then you get punched in the face like with reality, like, yeah, but no, we don't really use that one. So my whole thought, honestly, really is like there just needs to be one credit score. That way, when I see my credit score, I know what it is. I know that I can go apply for this bank loan, this car loan, this mortgage, whatever it is, because I know what my score is.
Yes.
But again, I know Cedric is not going to be able to change
Well,
that,
and
nor Larry.
yeah, and I love your story because it's really what everyone goes through, right?
Yeah,
Yes, you're right. There should be one overarching authority, but there isn't, and the reason why is because the government got involved, right? They're like, hey, you guys have too much control, too much power. You need to be able to give, because before no, you had no access. You had no idea what your credit
yeah.
score was. There was no way to know, right? Like
Hmm.
so the most important determining factor of your ability to buy was held secret by these credit reporting companies, right? So the government got involved and said, hey, you have to give them something, right? You have to give them the ability to at least track themselves. Give them some intel. So funny enough, that the big three, they created their consumer version of the credit report system, which is a competition for their own, right? But they did it, to help the government. But then they did it also for profit, right?
Yeah,
So when it comes down to it, it's all for profit, and that's why there's so many. Right? That's always so many. They're all trying to, like I said, they're trying to get relevance. They're trying to get clout, right? They're trying to become the authority. Like, hey, you should use my credit report system, not that credit report system, right? And of
right.
course, they say it really small, right? Like in the fine print, cannot use this or do not use this as a determining factor for mortgages or whatever. They say that at the very bottom, right? But of course, no one pays attention. They see
Of
the
course
big
not.
credit score and they're like,
Yeah,
"Oh, I'm a 700 credit score," and they walk around like you said, I'm big confident, right? And then you realize that's just their way of selling. They're trying to get you to buy more stuff.
yeah,
You know what I'm saying? So, for lack of a better description, it's marketing.
yeah.
Right? It's all marketing. Your credit scores that you see on your bank account, the credit score you see on Credit Karma, not to throw anyone under the bus, but it's all marketing, right? I'm not using credit for marketing purposes. I'm using credit score to determine if you can buy or not. So
Correct.
in reality, my information is going to be the most. It's not the most accurate. It is the score.
Yeah.
Accuracy or not, it is the score because that's what I'm using to qualify you. So
Okay.
so yeah, I mean, and I know we can have probably a whole another podcast about this, right?
Probably
But
so.
the bottom line is your scores are not going to be the same as my scores. So just wait until you see my scores, the lender scores, to
Yeah.
really know where you stand.
Yeah. All right.
Oh, and
So,
and one last thing, we all see the same scores, right? So if I pull a credit report and someone in another state, another company, they pull the credit scores and they pull the same day, we're gonna see the same. Because again, Fannie and Freddie made it a requirement to use these specific credit reporting systems. So we all see the same.
oh,
Just so you know. So if
okay.
you promote, because I had some clients who like, well, your scores don't sound right. I'm gonna go with another lender. I'm like, well, good luck. You're gonna see the same thing. In fact, you might see a lower credit score, right? But it's gonna be the same thing. So just
Okay.
want to make sure that that's clear as well.
Okay. Okay. Thanks.
Yeah, of
So,
course.
um, Larry, what are the current interest rates that you're seeing for VA loans?
So the last time I checked, I'm gonna check right now, because I like to give real data whenever I have these conversations. But the last time I checked, mortgage rates were in the mid sixes, right? But I'm gonna see for sure what they are for the VA. And I'm using and see, because I don't know what state you're in, I don't know what state anyone else is in, whoever's looking at this, so I'm not quoting a rate. It's actually very it's compliance issues where you're
Yeah.
quoting rates for states that you're not licensed in. So I'm just giving you an overarching what we see in the news kind of thing, right?
Okay.
So it was in the mid sixes yesterday. Today, it all depends on what day as well, right? Weekdays, weekends, the rates don't they don't update, right? It's only when the market's open. But we were in the low sixes for VA loans
Okay.
as of the last time we looked. So VA loan is usually one of the lower, excuse me, the VA loan is usually one of the lower rates, comparatively speaking, when you're looking at VA versus like a conventional loan.
Okay.
Yeah.
Okay. Got it.
That's also built in for veterans. VA is trying to make it so that the rates are not as bad.
Okay. So, are VA loans um, fixed interest rates, or can you get an adjustable interest rate VA loan?
Well, if you can, I've never heard of it. I don't think so, right?
Okay.
So as a lender, a lot of us try to be absolute with our answers. Like, no, this is the absolute. I'm gonna tell you, I don't know everything. There's millions of lenders out there, right?
Hmm.
There may be a veteran-related loan that has an adjustable. I don't know. There might be a veteran-based bank that allows for that, right? Hey, you're a veteran. I'm gonna get. I don't know about that. I just know normally across lenders that are like us, it's a fixed rate. There's no adjustable VA loan. But again, I can't speak for every single lending institution in the United States of America.
Hey, thank you for tuning in to the Service to Syndication podcast. If you are a military service man or woman, government employee, or any other service related professional, this is for you. I once was where you are. As a service member, I lived paycheck to paycheck. As a government employee, I knew there was more out there for me. I tried all the get rich quick schemes. None of them worked. Then a friend of mine introduced me to real estate investing. I am a commercial multifamily syndicator who helps those who have served in the military and those who provide services to our men and women in uniform and other service oriented professionals achieve their time, lifestyle, and financial freedom by investing passively into multifamily real estate. If you know that this life has more in store for you, I invite you to tune into the Service to Syndication podcast to learn the tools, tricks, and concepts to help you achieve the time, lifestyle, and financial freedom that comes with investing in real estate. So go over to cobbscreekcapital.us. That is COBBSCREEKCAPITAL.us and schedule a call so that we can get to know one another and see how we can work together to help you achieve your goals. Okay. In terms of loan terms, um, what loan terms are you seeing for VA loans?
30 years are the typical loan
Mhm.
terms. Yes. Yeah, that's something that I don't think I've ever done a 15-year VA loan ever.
Oh, okay. Oh,
Yeah,
good.
not that it doesn't exist. It might exist, right? But usually when someone's getting a VA loan, they're in need of help, right? They need the lowest down payment possible, the
Mm-hmm.
lowest mortgage payment possible. You're
Mm-hmm.
gonna find that with a 30-year, right? You're not gonna
Okay.
find that with a 15-year means it's gonna be higher payments, right? So usually when someone's doing a VA loan, they're doing it because they need help. So most of my clients have done 30. Again, is there a 15-year? I don't even know. There probably is. I never went that far because I didn't need to.
Okay. Okay. Got it. Um, see, I'm ready to apply for my VA loan. How much can I qualify for? What goes into that number to say, Cedric, you only qualify for $2 million house?
So
What goes into that?
this is a great question, and the reason why, because it's very it's handled differently by everyone. Okay, most lenders are going to tell you, well, I don't know. You just have to apply, right?
Hmm.
And it's because they don't want to do the math. And plus, it's dangerous to do math that you don't have all the details. It's kind of like doing algebra, but you have 10 variables, but you only know three of them, right?
Right.
So they don't like to do public math, whatever. Um, so they would, they would be like, well, I don't know. I mean, give or take, how much do you make? Give or take, how much do you spend? Okay, maybe give you a quick ballpark from the top of my head or using a calculator. But in reality, they're always going to push you to do the application because it's true. There's no way you're going to know every single liability that you have to pay. There's no way you're going to know what your income really is, especially if you're self-employed, right?
Hmm.
There's no way you're going to be able to do the math. I mean, we struggle to do the math ourselves, right? So we have to use tax returns and stuff like that. So it really depends on the information that you provide me, right? But I've actually helped people sort of, I guess, guesstimate, which of course I think a lot of lenders would not like me telling you, but basically it's just a simple, it's a simple formula, debt to income ratio, right?
Oh, okay.
How much debt do you have, and how much income do you have, right? And then whatever's left over is basically what you can use to buy a house up to a certain percentage, right? Normally, for VA, you're looking at about 40, maybe 45%, 42% ish, right? Conventional, you can go up to 50%, but mostly we usually try to stick around 42%. FHA can go up to 50, 55%, maybe even 56%. Plus, also depends on the lender, but also the underwriting system. What does it say, right? I've actually had people who applied and they didn't qualify for anything above 50%, even though FHA allows for 55% because risk factors. Their credit scores are too low. They're not putting enough money down or whatever. They don't have enough money, not money down, but they don't have enough reserves, money in the bank.
Hmm.
So they'd rather prefer not to get them above a certain DTI, debt income ratio. But basically, the formula is debts over income, debt to income ratio, right? And I actually have like a little, I actually wrote it out. I can send that to you as well, how to do it. But again, it's dangerous because again, I'm giving you the math, but I don't know what the variables are, and the variables could be anything.
That's kind of interesting. Something you just mentioned, that if I don't have reserves or a certain amount of reserves in the bank, that kind of limits what they are willing to qualify me for. Uh, wow, I never thought of
Yes,
that one.
yeah. So something that I try to explain to people, because when I ask people, how much money do you have, right? A lot of people are really scared to tell me because it's almost like okay, I used to sell cars, so I understand, right? When a car salesman is asking how much do you have, they know the more money you put down, the better deal they can get, right? And they're gonna
Mhm.
take every penny. How much do you have for a down payment? Oh, I have 10,000. Okay, well, we're gonna need $10,000 for you to buy this car, right? They work the math, and again, I don't want to get into the car business, but the more cash you put down, the more profit the salesman can make, right? So they want every dollar possible, right? And it's I wouldn't consider it predatory, but it's definitely something that is putting you in an advantage if you have cash. When it comes to lenders, we don't have that ability. Like I can't get a better deal, a better profit margin if you put 4% down instead of 3.5% down on the FHA, right? I'm not gonna get more profit margin if you're a veteran and you qualify for zero down, I get you to put 1% down. There's no profit margin extra for me, right?
Okay.
So that's one of the reasons I like the mortgage business is like it doesn't matter how much you put down as long as you put down enough, right? Um, so one of the reasons I ask how much do you have, I want the honest answer because how much you have to put down plus how much you have left over reserves can help you qualify. I've actually had loans that didn't qualify initially the way I put it in. And then when I asked them about, do you have a savings? Do you have a life insurance? Do you have anything like that? And they're like, yes. And I put that information in and boom, all of a sudden it qualified. Even though they're not putting more down, they're not paying more closing costs. They're still presenting the same amount of cash to close. But the fact that they had reserves in the back got them over that hump of qualifying, right?
Yeah.
And it makes a lot of sense. It's like, okay, well, you're not going to be completely cash poor and broke once you buy this house. you're not going to be eating ramen for 6 months, and we don't want to put you in that position, right?
Right.
But so we know, and reserves, the way it works is mortgage payments. Do you have 1 year? You have 1 month's worth of reserves. Do you have 6 months worth of reserves? Do you have a year's worth of reserves? Because I guess the rationale is, if you were to stop working today, how many months can you make payments after the fact, right?
Okay.
If you stop
Okay.
generating income for whatever reason, if you decide to take a vacation or you got fired or laid off, whatever, if you have zero reserves and you're barely making it qualifying, they're probably not gonna qualify you, because they're concerned that the moment you buy the house, you're gonna miss payments, right?
Right.
Whereas if you reserve, you're not gonna miss payments. You're gonna have 6 months worth. You're gonna have a year's worth. You're gonna have whatever, right? So people might not emphasize it, but cash, and when I say cash, I'm talking about like funds, not talking about cash on the mattress. I'm talking money that you can see, right?
Right.
Cash is king when it comes to qualifying, right? The more you have in reserves, the way better it looks, right? FHA for sure. I've actually turned the tables on qualifying because they had more reserves than we actually initially put into the application. So it's a big deal, and it's a determining factor. Like that's on our qualifying sheet. One of the things it says how many months reserves: 1 month, 0 months, 20 months. It actually, that's one of the things that's presented in the underwriting
Oh.
system. How many months of reserves do they have? Yep.
Oh, wow. Okay. Okay.
And
Wow.
and again, I've actually got a call. I went from like 6 months to 7 months, and that's one extra month qualified them. So 6 months they didn't qualify, and I add another thing, another payment, or whatever, and it qualified. So I'll be like, hey, Mr. Customer, we might not be able to qualify this month, but next month we'll qualify, because you'll have the extra months of savings that you'll have, right? And they're cool with that, because then before they didn't qualify at all. So
Okay.
now it's a timing thing, right? It's not even like, do you qualify at all? It's more like, you don't qualify in 2023 of December, but you qualify in 2024 of January. Why? Because you have that much more in reserves.
Got it. Got it.
Yeah, so it's a
Okay.
game changer, or it can be a game changer. Yes.
Yeah. Yeah. But that's
Yeah.
good information to know. So, are there any specific requirements for I'm sorry, specific occupancy requirements for a VA loan?
Yes, they need you to be in there for at least a year,
Okay.
1 year. Yes,
Okay.
and I'm glad you're asking that question, because I know that's sort of stemming towards the investment thing, right? Um, so this is a question I get a lot from my veteran audience, right? They want to buy a house with a VA loan, but they want to rent it out,
Hmm.
right? It's the best deal possible, right? You zero down, but it's an investment property, right? You have to be careful. You can't buy a house with the intention of making it an income property or investment or make money off of it if you don't plan to live there. You cannot do that as a veteran, right? And I'll explain why. That way
Okay.
it makes sense, and you can basically believe it's fair.
Okay.
The whole point of the VA loan, like I said before, was to help the people who served our country and their families have a house when they come back, right? That's the whole purpose. That's why the VA loan was invented. These guys and gals need a home, right? So they're going to do everything they can to help you get into a home, to protect you and your family. When I say family, I'm talking about your wife, your husband, and your children, right? So that's the whole purpose. The purpose was not for you to make money, right? It's to help your family, right? So if you buy a home as a veteran, from their perspective, they're helping you and your family, right? That's why there's no money down. The credit requirements are lower. The interest rates are better. They're helping you and your
Hmm.
family, right? So the only thing to ask is, if you buy a house as a veteran using the VA loan, live in it for a year. That way we know we feel good that we did this for you. We hooked you up, right?
Okay.
After that, you do what you do, right? So they're asking for 12 months of occupancy, right? Because again, they're helping the family. They're not helping you to make profits,
Right.
right? So when the veteran's like, why can't I buy, an investment property on zero down? Because that defeats the purpose of the VA loan. See what I'm saying?
Okay.
So that's why you can't do that.
So,
But I guide. When I work with a veteran, I'm trying to help them for their entire lives. I'm trying to build their
yeah.
portfolio. I'm trying to get their family. So I'm like, okay, let's do this. Buy this house, limp in, and then 12 months, let's do like maybe a cash out refinance, get some funds out, and then purchase a new VA loan, right? Even though you don't need cash out, right? Do a new VA loan, right?
Okay.
And we can actually qualify you using the rental property. We can't do it for the first 12 months. because you're supposed to be living there. But month number 13, you have a
Yeah.
lease. Now we can use that income from your old home and put it towards a new home. And the reason why you might want to do cash out refinance is to free up your eligibility. Because if you buy a home with a VA loan, your eligibility is tied up to that house, right? You've obligated the VA to cover that house, right? If you go buy another house, your eligibility may not be in existence, or a portion of it's missing because it's tied up to another house. So you cash out, you take that VA loan, it turns into a conventional loan, and now you're back to having full eligibility, and you can buy another house at zero down. That's the
Okay.
reason why you might want to do that.
Okay. Since we're right here, I've also heard, and correct me if I'm wrong, that I could have more than one VA loan.
Absolutely, you can 100%. That's probably one of the top 6 misconceptions. We call it myths, but that's probably one of the top 6 misconceptions about the VA loan is that you cannot have multiple VA loans. That's totally incorrect, right?
Okay.
It all depends on your eligibility.
And,
Okay,
and now explain that a little bit more. So, I can maybe have 3.
it depends. Again, eligibility, right? So let's say you bought, I don't know, a $100,000 house,
Okay.
right? So you have $25,000 tied up to that, right?
Okay.
Because remember, it's 25%. That's how much they guarantee, right? So subtract 25,000 from your eligibility, right?
Mm-hmm.
Now the way eligibility works, and I probably should have this number memorized, but there's a certain amount that you're eligible for. Well, there's also extra eligibility on top of that, right?
Oh,
And it
okay.
depends on the loan. It depends on the loan amount, right? The maximum loan amount in that county. So
Gotcha.
let's say the maximum loan amount is 600,000. Just throwing a number out there, right? So then your eligibility will be actually 25% of 600,000, which is what, like 150? Is it 150? 150,000, right? I think
Yeah.
that's the math.
Yeah.
And again,
Yeah. That's it.
I'm using simple numbers so we can do simple math publicly
Yeah.
easily. It's a different number for sure, right? So you have
Yeah.
$150,000 eligibility. You've used
Okay.
25,000.
Okay.
So now you have 125,000 of eligibility towards your next house.
Got it.
And,
Got it.
and again, I'm using really simple math. It's probably more complicated than that. The numbers probably off a little bit, but I'm
Yeah.
just using like the example to show you fractionally how you
Mm-hmm.
might be able to buy a second home and then a
Okay.
third home. It all depends on eligibility. Now, if you
Mm-hmm.
buy $100,000 house, you buy another $100,000 house, well, then you might still have eligibility left over in that county, right? But if you buy $100,000 house and you buy a $500,000 house, it's probably going to be just those 2 houses, right?
I got it.
And
Okay.
by the way, remember I told you how there's no limit on the VA loan. That's only if you have 100% eligibility, right? So on the first house you have it tied up. The second house you don't have unlimited loan amount. You're subject to the eligibility number. But if you go
Okay.
back to zero, right? If you go back to zero, like I said, sell that house or refinance it, cash it out, turn it into a conventional loan. You're back to zero. Well, then your next home can be whatever. So you can literally buy $100,000 house with a
Okay.
VA loan, turn it to a conventional loan by refinancing. And the reason why I coach people this because I get to do multiple loans for a veteran, right? So it helps me to help you guys do this. Okay. So you buy the VA loan, that's loan number 1. You refinance it to conventional loan, so you can get out the VA, so you can free your eligibility. That's loan number 2, and now you're buying the third house, and it's a $2 million house. So you have $100,000 house VA loan, turn it to conventional. Now you're buying a $200,000 $2 million house with a VA loan,
Okay.
because my company can do up to $2 million with a
Gotcha.
VA loan. So
Okay.
so there's and that's not using 2 VA loans at the same time. That's using the VA loan, but they freeing up your eligibility so you can buy another house. But yes, you can actually own both houses, but then there's a limit. You won't be able to do 2 million in the second house. It'll be at most probably 400,000 or 500,000 because you have
Oh,
your eligibility tied up on your first house still.
okay. Okay. I got just a few other quick questions to ask you regarding
Sure.
the VA loan.
Sure.
Um, how does one go about getting pre-approved for a VA loan?
Um, so of course you gotta speak to a lender like myself, right? And then we should, some people don't, but we should do like a quick interview, find out like what's going on, what's your situation, what's your income looking like, what's your funds look like, what are your plans, what are your goals, what's your current situation, right? Any red flags that we should be considering, and then we have you fill out an application, we pull your credit, and that's where the fun starts. right? Again, if your credit score is anywhere between 580 and above, you should have no issues, with the credit score. If it's below 580, then we might have to do some work, right? We have to look at certain things. We have to get some compensating factors. We might have to structure it differently. But if you're at 580 above, then we're past the credit score thing. Now we're looking at income, right?
Okay.
How much money you're making versus how much you're spending, right? Um, I've had people where they spend nothing. They have no debts whatsoever, right? So that means, up to 30 to 40% of your income can be used towards the house. So if you make $100,000, right, you divide that by 12, and then you divide that, the single month of your monthly income by 40%, and that's how much you can use towards the house. That's how much your payments can be. Right?
Okay.
So I'm giving you some quick math on how you can kind of think where you should be at, right? But basically, that's how you have to look at things. Is you qualify based on your credit scores because that's one hurdle, and then you qualify how much you qualify for based on your income and your current debts. Now, I've had people where they were over 50% debt to ratio without the house. You qualify for nothing. You don't have any extra room in your income to qualify
Yeah.
for a house because you're using all your debt to ratio towards your current debts, whatever it
Correct.
is, right?
Correct.
So, I've had people who, they wanted a $200,000 house, but they qualified for 100,000. I can't change those numbers. There's nothing I can do about that. It's not lender specific. It's not like, okay, well, you only give me $100,000. I'm gonna talk to another lender, see if he gives me $200,000. That's not how it works. We all use the same guidelines to now there is possible negligence. Maybe I did a really bad job of calculating your income and this guy might do a better job. There's that possibility, but for the most part, if you're dealing with two individuals who know what they're doing, they're going to see the same exact information.
Okay. All right.
But you
Are
qualify
there?
by telling the lender. I'm sorry, go ahead.
Oh, I'm sorry.
I
Are
was
there?
just saying that you qualify just by talking to a lender and
Oh,
and,
okay.
and, and applying, and they'll give you the information. Now, if you want to know what the numbers are, what the
Mhm.
requirements are, you can look it up. You can Google it. I created a class where I answer a lot of those questions, like over 100 questions. And most lenders should be cool enough to answer those questions without you having to pull your credit, which is what I try to do all the time. You know,
Okay.
so you can always ask me if you want to know what do you need to qualify. We'll find out. It's a case by case basis.
Got it. Got it. Are there any specific appraisal requirements for VA loan?
Okay, so we call it MPRs, right? What is? I know the I know the what do you call it the
Acronym?
analogy the
Yeah.
acronym, yeah, I know the acronym for this, minimum property requirements. Yes, minimum
Okay.
property requirements, right?
Okay.
So they generally fall under being safe, sound, and sanitary.
Okay.
Okay, safe, sound, and sanitary. Okay, uh, which is very vague, right? But it kind of falls upon like what the appraiser thinks, right? So that's the best way to answer that question.
Okay.
There's no, it's not like there's no mathematical like formula I can give you, right?
Yeah.
But I'll give you an example of some NPRs, right? Lee-based paint, yeah,
Mm,
prior to 1978.
yep.
It's got to have a roof, you know. It's got to have heating.
Okay.
High voltage electric lines, right? There's specifics. Cosmetic work is not an NPR. Like if the house is ugly, right? Like I don't know, if the paint looks faded, that doesn't affect us.
Yeah.
Yard work, like if you have a gnarled looking tree in the background, I mean, as long as it's not causing damage, it doesn't look unsafe. Like no one's gonna get stabbed by a branch. Yeah, just whatever. So yeah, I mean, the there's value that the appraisers try to give, but there's also like requirements that they're looking for,
Okay.
and the cool thing about the VA appraisal is that there's possible waivers, right? So example, let's say you have a damaged garage door, right? And the appraiser is requiring it to be repaired, and the materials that are needed are not available because of the trucking system. There's lack of lumber, whatever, right? The company provides the doors, they don't have any. You can actually write to the VA saying, listen, I know you required the garage door to be repaired. Unfortunately, the people that provides these repairs don't have the materials to do it. So can we go ahead and just get past this, right? Can we go ahead and make an exception and ignore this and move on, because there's nothing we can do about it, right? And maybe there's like paperwork that show that after the fact that it was repaired, whatever, they'll actually overlook that and move on, right?
Okay.
Now, I'm glad you're asking about the VA appraisal system, because when it comes to that, I believe the VA has the best process versus other loans, and I'll give you two quick reasons why. Number one, they have Tidewater, which is like the ability to provide comps or comparables to influence the appraisal amount, right? And there's an actual process behind it, right? So that's a really cool mechanism. However, not every single attempt works, right? Not every single attempt makes it so that it works out for the buyer, right? So we also have the ability to uh, go over the head of the appraiser and go directly to the VA, right? It's a process where we're basically asking them for an exception. We're asking them for um, like not to discount not to discount the appraiser, but to hey, consider our case as to why we think this house is worth it, right? And it actually has a 50% success rate, right? So what I mean by that is you might not succeed on the Tidewater,
Okay.
which is something that other loans might also do. Like if the appraisal doesn't match the amount, the real estate agent might try to get comps, whatever, and then it might work out, it might not, right? So if that happens to them, they're stuck. I can't do anything about it. It is what it is, right? The appraiser's not willing to bump. Whereas the VA say, okay, well, it's not working out this route, but let's go ahead and see if we can go talk directly to the VA. And again, it has a 50% success rate of actually getting something. Not always 100% increase on the appraisal, but maybe 50% of it, or maybe 25%, or if you're short 10,000, maybe you'll get 5,000 more, or maybe get 2,000 more. But it helps, right? It has a 50%, like statistically speaking, 50% success rate. That means 50% of the time when you submit it, it actually achieved progress. The crazy thing is, only 1% of VA lenders have attempted to do that. So there's 100 appraisers, 100 appraisals that did not meet. Only one of them was submitted for a reconsideration of value, RCV. Reconsideration. So out of 100 lenders, only one did it, and that lender did it and achieved it. Actually, let me change the statistics. Let's say there's 200 appraisals where it didn't meet value. 200. Two lenders out of those 200 submitted for a reconsideration value, and one lender actually got the value, right? That means 198 appraisals were just, it is what it is. And that's why I'm a veteran mortgage advisor, because I'm trying to educate people that you're missing out on opportunities. You're losing deals because you're not taking the extra step, right? And that's what makes the VA appraisal superior to all other appraisal systems, because you have that one. You can literally supersede and go above the head of the appraiser and say, hey, you know what? He's a cool guy. She's a cool gal, but I'm not going to take their value. This is why I think you should give us the value. And the VA may be like, you know what? It makes sense. We're giving it to you. 50% success rate.
Oh, nice.
Yep.
All right. So, real quick, how long does it typically take to process a VA loan?
Well, it really depends on the lender.
Okay.
Right. But also the VA appraisal does make a difference. Yes, there could be a delay on VA loans. It depends, right? But for the most part, they have accountability. They actually give you a timeline on when they expect it, right? And they're subject to the VA. So like appraisers in general can say, oh, it's going to take this long, whatever. And there's no governing body forcing them to do it faster. It's
Yeah.
it's a contractor thing, right? Like, hey, who's willing to take this job for 10 days? Oh, well, I'll do it, but I'm going to charge you twice as much. Right? You're subject to whatever the market's offering you. The
Mhm.
VA, they have a timeline they must meet because the VA is making them accountable, right?
Right.
So the appraisal is what takes the most time, right? But also when you say how long does it take, well, there's also the lender. How quick are they, right? It really depends. If you're talking to me, it might be an unfair advantage because we're actually really fast compared to most lenders, right? Like
Okay.
we have like a 21 turn time rate
Wow.
nationally, and that includes new builds, right? I mean, we've gotten clear to closes in 7 days, right? And that's only because legally we can't do any faster. You have to have the 3 day wait period after you send out disclosures. You have 3 day wait period after you send out the CD, the closing disclosure, right? So
Yeah.
legally, that's the fastest we can close is 7 days.
Wow.
So yeah, I mean, it really depends. But VA loan, I mean, is the appraisal going to be fast?
Mm.
Are there hiccups in the file, or is it very, very smooth, clean file, right?
Right.
How fast are people responding to things?
There you go.
There's so many different varying factors. If I was to be safe, right? If you're asking me, if you let's say you are the buyer, hey Larry,
Hmm.
I'm making decisions, I'm scheduling, I want to get movers, I want to know when to tell my family to just start heading into town so we can celebrate. I'll be like, let's make it 30 days.
Okay.
Give me 30 days, right? As a lender, I'm gonna ask for more time anyways. I mean, you understand. The more time we give each other, the better it is for us, right? So
Exactly.
you're asking because it's always easier to it's always better to close early than to close late. You know.
Absolutely. I
Yeah.
totally agree
Yeah. So
on
I'm
that
gonna ask
one.
for 30. I'm gonna ask for 30 days. Knowing I'm gonna ask for 30 days knowing I can close in 21. But not every lender can say that.
Yeah.
So
Okay. Um, can a VA loan be assumed by another borrower?
okay, this is actually a really popular question since of the rates because of the rates, right? The answer is yes, depending. Right? Now, the VA loan assumption by another veteran is a process designed because the VA understands that people who are serving in the military, because VA loan is not just for veterans, it's also for active duty members, right?
Hmm.
So the military knows and understands that some people in a VA loan may have to move based on where they're stationed at or whatever, right? Assignments, right? So it makes sense for them to be able to assume each other's loans, right? A veteran might have no choice, or an active duty may have no choice but to move because of where they're being stationed at, or what their mission is, or their duties are, right? So the VA makes that a possibility. Um, you also can do that with other loans, possibly like an FHA loan. Um, so yeah, but the reason why we don't talk about it much, and the reason why it's not popular, number one, the lender ourselves, we don't get the benefit from that. When someone assumes a loan, they're assuming it to the servicer, the provider of the loan, right?
Hmm.
So let's say you have a loan with, I don't know, let's just throw a name out there, Chase Bank, right? You have a loan with Chase Bank. You're asking me, Larry, I want to assume this person's loan. Can you help me? I'm like, no, I don't work for Chase Bank. You have to go to Chase Bank to do that, right? Because Chase Bank owns the loan. So you have to go through their system, their process, right? I myself, as a lender, I don't have any say in that because it's not my loan. Now, I can help you buy a new house, but it will be a totally different loan, and that defeats the purpose of assuming the loan because you're probably assuming the loan because you want the low interest rate or whatever, right?
Hmm.
So I have no say in that. So you have to go through Chase. Now, every bank has their own system, or every lender has their own system, their own process, right? And I actually did research on this because I knew people were going to ask me this question. That you literally have to go through their lender or their service provider, whoever they're paying the mortgage to, and find out what their process is, and you have to qualify through their system. The thing is, just so you understand, us lenders, we work fast because we have timelines, we have closing dates, we have people we have to make happy. Our floor partners, agents, clients, people are moving, right? There's all sorts of things happening, so we have to be Johnny in the spot with our process, right? Otherwise, no one's going to use it. If I take forever to close a loan, no one's going to want to use me, right? The service providers don't care. They don't care. They already have the loan.
Right.
They're already getting paid. I'm getting paid. I get paid a commission if I close a loan, right? They're already being paid right now. They don't care who's paying them. They're getting paid. So
Yeah.
they're not gonna. They're sitting on the hand. They're not gonna go fast. So I'm telling you this because when I ask people how long does it take, I've actually heard people tell me it takes up to 6 months
Wow.
to finalize the process.
Wow.
That means you picked up the house, you made it, you made an agreement with the seller. Hey, I'm gonna assume your loan. Cool, awesome. 6 months later is when you might be able to move in. I've heard people say 90 days, and I wouldn't say everyone, but I would say a good majority said it was the worst thing they've ever did. This is the worst process they'll never do. It's not worth it. That's
Okay.
But not everyone said that, but most people did. Okay, so not to say you can't do it.
Mm-hmm.
It's just not popular for those reasons. Okay.
Got
But
it.
yeah, it's possible. It's possible to assume a loan if you want to keep someone's interest rate. But I don't know. Have fun doing it.
All right, all right. Yeah, man, we've learned a lot today about the VA, the process, the VA loan, the process, requirements, eligibility, and the like. Well, Larry, it has been a blast having you as our guest today. And as we close out, please tell our listeners where we can learn more about you, get in touch with you, and learn about all the fabulous things you have going on right now.
So if you want to just search me and let's find me and talk to me, you can probably just Google Larry Lee or Larry the Mortgage Guy and you'll probably find me. LarryLee.com, that's my domain. It goes to like my what do you call it, link tree page, which has like my phone number, email, whatever. So Larry Lee, LarryLe.com. I bought that domain like in the 90s. Okay, so LarryLee.com. Should go to my information. Now, if you want to avoid talking to me, like I don't want to talk to no lender, I just want information, then I again, if you remember, I said you read my bio, I create a process, a class where you can learn information without having to deal with a lender. Because we're salespeople, we're going to try to sell you, right? But if you want to, if you want to peek behind the curtain without having to obligate yourself, you can go to my online, like a blog, like a quick Q&A. It's called LarryAnswers.com. So LARRY and then answers, ANSWERS.com. And that is literally like just a resource of mortgage related questions that you can read, and it shows the question, it shows the answer, and I answer it in my way because it's going to be how I would answer if a client emailed me or called me. But I also create a ChatGPT version. That way, it's not biased from my perspective. It's a generic answer, so I can put both on there for you. Okay, that way you can get my version, but you also get a generic version that the robot gods created. Right, so you can choose whichever answer you want. But I create that as a resource so that you can again get mortgage knowledge without having to align yourself or commit yourself to any lender, because I know it's scary to talk to us. Well, I made it so that's not scary. And if the hope is to earn your trust, and then maybe you'll remember me if you do plan to proceed. But that's basically what I create as a resource for that, for you guys. So hopefully that helps.
Yeah, I'm quite certain that will, and I'm pretty sure some of my listeners will definitely check that out.
Yeah, I call it LarryAnswers.com because your lender didn't. You know what I'm saying? When you call them, I'll answer.
Nice. I like it. Awesome, Larry. Again, I want to thank you for your time today and all the wisdom you have provided to my listeners. It's greatly appreciated. And I want to thank you, our fans, for tuning in to the Service to Syndication Real Estate Podcast, where we want to provide value to you and your investing business. Please tune in to our next episode where we will interview another fantastic real estate investing professional. See you next time.
Thanks for listening to the Service to Syndication podcast. We want you to know that we love and appreciate your support, and we are grateful about being a part of your journey to becoming a successful real estate entrepreneur. Please share this episode with a friend who you think will get a lot out of what you just heard. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be in all areas of life. And if this was really valuable, share it on your social media stories and timelines. Thank you for watching and listening. Now go be great.